here's the thing about strong moving markets. You won't always get nice deep retracements to be able to get in on that next move, whether it's a leg higher or a move lower. So you'll need to have in your toolkit the ability to take action sooner, but with additional confidence and additional techniques. So if you're new here, I'm Hema Reddy. I use price action, market timing, and momentum, my RSI power zones at the bottom of this chart, to boost my trading and that of my tribes. As you can see here, I trade the E-mini S&P 500 futures, and this is between a 3-minute chart and a 15-second chart. So you can see here, I had just gone long on this trade. Now, the main reason for going long was because of the strong uptrend in price, the strong uptrend in place, but also because the 15-minute chart had retraced 25% of the prior move. And that was showing as a reliable area for support in this very strong market. This was in conjunction with the RSI returning to the 15-second bull support power zone. So this is a combination of two things, right? Price action and momentum. That's why I always teach, don't just take action on one item. So I was filled, but now you can see some waiting was happening and the market wasn't exactly shooting higher from that 25% retracement. So now it's a bit of a waiting game, and we'll jump ahead to when the market actually started making some decisive action and turns. So after going sideways for a bit, the market started to turn higher. You can see I was using trend lines to help me stay on top of the action. Using a trend line alert for action moving up or down, like having both sides covered, keeps you from having a bias. So here I took action to go long. I have two contracts. The first exited at 2 points and I raised the other stop to max 2 points risk. This is part of my approach. And now I'm looking to get more out of the next contract. And by the way, what you're seeing here is what I do every week live with my students who are in my S&PH Pro. They also get my actual research that ties into how I come up with what I think is going to happen for the day and trade it. And we go through the markets like this live from the open, starting actually before the open and carrying out through after the 10 a.m. hour. So here you can see, I realized, okay, there might be a opportunity for this market to push higher. So I started to bring in some forecasting techniques. Jumping ahead here with that forecast in place and my trade live, and now I'm moving the stop to break even to protect it. So now I will basically make 2 points at the worst case scenario. Even though the market can slow down in a fast-paced market, you still can just use the smaller movement of price action to manage the trade. And that's exactly what the remainder of this video is. So using alert lines so that you are not staring at the chart, you're just letting the sounds tell you, hey, we're going higher, or hey, we're going lower. And then as needed, measuring out what's going on, using it to come up with more detailed targets, and adjusting your stop. So a lot of folks ask if I have an exit order. I do. It's in the matrix on TradeStation, but I push it really far out because my ideal is not to get out of the market at a predetermined level. It's to get out on a trailing stop. It's like if there's a wave of action, I want to get in close to the bottom and close to the top. I don't really want to project my opinion. Now, let me share that with all of this analysis you see here in that morning's report, I had said, hey, I expect futures to rise into the 5,900 area. And on that 3-minute chart, you can see we were headed towards it. So while managing this trade, I did have in the back of my mind, okay, I know that when we get to 5,900, we probably will pause. So I was still trailing using the 15-second price action, but you can see here I started putting alerts at further out levels. And then here's where the price action started to get real close to that 5,900. So it was tightening up my stop even more. And then it was picking up pace and shot right through the 5,900 level. Again, I chose not to exit simply because of that. I chose to exit on a trailing stop, which you can see here actually landed at that most recent 15-second chart price low. So the rest of this tape after this, if you were watching me live, was me managing the trade to get out that exit. So I hope you found that helpful as a reminder that in fast-moving, strong markets, you got to be aware that you're not going to always get deep retracements. Don't go and just jump in and add 25% retracements to your trading plan. Okay, it's not for everybody because it's very fast and it requires you to take on a little more risk than you would with a deeper retracement. But at least start observing it in your own markets, especially if you trade short-term timeframes like I do. So if you're brand new here and you want to dig in and learn about the RSI power zones and more, including my S&P Edge Pro, where you can join me in the markets every week, make sure you're on my email list. You can do that by joining via the links below. If you already get my emails, then keep an eye out. We have a special going on in the S&P Edge Pro right now, but it ends real soon. My next live trading lab with S&P Edge Pro students is tomorrow, Tuesday, October 15th. And yeah, it's crazy times in these markets, but definitely opportunities to be had. All right, if you liked this video, got value out of it, please hit the like button below, subscribe to my channel if you haven't already, drop a comment so I can know how this added value to your trading, and I'll catch you soon.